Yo, what's going on? So today, just gonna be doing a quick little trade recap of all the trades that I took this week, sort of like a breakdown or like analysis, top down, whatever you want to call it. And this week we went 5 for 5. So typically, I'll average like a 80% win rate, and this week we went 5 for 5. So you guys know what that means. But one of my students just passed 2x 50K accounts, which is huge. So big ups and congrats. Gonna try my best to get him paid out this month. We'll see how that goes. But I'm gonna try to post more consistently, more content, either like this or more vlogs or whatever, whatnot. We'll see how that goes. But if you guys are here for the content, go ahead and hit that like, hit that subscribe. If you guys want to join the Discord, the link is in the description as well. So this was Monday. We had a crazy external SMT, and then we had internal SMT in this range. And then we had a fair value gap, right? We inversed the fair value gap entry off of the fair value gap, which wick, this is wick 3, FYI. And then that consequent encroachment of the wick. Ideally, you want to be able to tell what sort of profile you're in, whether it be a high resistance or low resistance. If you're in a high resistance liquidity, you would have had your stops above this high right here where liquidity resides. Stops at CE of that wick, straight to the Judas low. As you guys can see, this is clear accumulation. To the left, manipulation, straight into SMT. We're in a deep premium going into Monday. Monday was actually the cleanest price action of the entirety of the week. It was Monday and Wednesday's London session. Those two were super duper clean. But right here, inverse the fair value gap, we get in, boom, and it's been like 10 minutes. TP hit. As you guys can see, trade, timestamp and everything, you're feeling lost or confused. We print a SIBI in what? Directional favor of our bias because we're what? In a deep premium. So you could have entered either off of this SIBI right here or you could have pyramided and then boom, straight to TP. So let's dive into Tuesday's price action now, right here. As you guys can see. This was taken on the M5, actually. Because this is super duper clean as well. It was PM. We tap into a time array, which, if you guys don't know, there are certain PD arrays that the algorithm will refer back to that get printed at certain times. And whenever we trade into those inefficiencies, the precision and accuracy of those levels are just insane. And whenever you see price supported and respecting it, obviously institutional order flow, that's whenever you get in. So I waited for confirmation. I saw this first order block right here. This was the wick that tapped into the time array. As you guys can see, tapped right into what CE of it, and then we printed this order block. I waited for confirmation on the second order block, got in right at this macro time. Again, if you're not entering during your macros, you're significantly reducing your win rate. Again, you always want to enter during the macros because what are macros meant to do? They're meant to spool price towards liquidity. So we took the trade off for this order block right here. Stops having a threshold. You guys can see we get pretty close. We get pretty close to getting wicked out. That wasn't even our true stops. It was like one tick away from getting whipped out. But whenever we tap into a time array, again, we're cutting through price, and we see these signature price moves, that just builds confidence. Like, look how much we're risking to our reward. Like, our RRs are just, can't really beat that. All right, so for Wednesday's trade, we had our clear, accumulation, manipulation. This was news driver. And then we wait for, this is our model 4. And as you guys can see, we entered off of this. Well, this wasn't even the actual trade. The actual trade was right here. And as you guys can see, look at the time. Right here. And yeah, so we tap into this order block. Stops would have been mid threshold, targeting these highs. And again, like I always encourage my students, it just depends on your confidence. If you're always like leaning towards one direction, but you're not confident or you're not too sure, always wait. With a volume imbalance, trader into it. So this was the exact amount of trade, straight to TP. All right. So Thursday we actually traded during London session. I'm gonna put you guys on some sauce real quick for the free ski. But basically, whenever you have your first presented fair value gaps, and everybody should have their opening range gaps and their first presented fair value gaps, there's a 5-day look back period. You always, and it's fractal. It goes all the way up to any time frame that you're on. You always want to see these confluences. I always take the first presented fair value gap of just the New York AM session because that's where I see the most accuracy and precision. We're accumulating in what? What are we accumulating in? We're accumulating in 2 super duper strong discount arrays, and these are I call these quote unquote time arrays just because the opening range gap is whenever you close to your open, which is during an allotted time, and same with your first presented fair value gap. It's during a allotted time that you have during the opening range. Yeah, so these two were both in conjunction, as you guys can see right here, the extra dark gray, and we're just super duper volatile. Entered off of this right here, this strong SIBI. You just want to see it get traded through. It was respecting it at first. We see an inversion right at that candle close. Got in at a higher time from draw liquidity. Boom. Everything's like factored or filtered, I should say, through the economic calendar. So if you guys want to see what sessions are going to have more prominent volatility, always check your economic calendar. You always want to see an 8:30 news driver, orange or red folder, or 10 a.m. either or. 10 a.m. usually indicates that London is going to be pretty messy, so I wouldn't trade London. This was Friday's trade that I took. Took it on two minis. Took it off of this order block right here. I'll just pull it up on my chart because this was today. We have this first presented fair value gap that supported this SMR. SMR just stands for smart money reversal. So this was like the reversal point. And then we respect another first presented fair value gap. Again, these are all time arrays, so gaps at a lot of times. We soup this first presented fair value gap right here. And then this is M15. Took off of this order block right here. With targets for this SIBI right here. It depends on the contract that you're on, but on the June 2025 contract, we actually hit this, and that's where I partialed. And I saw that we're just souping this, respecting the lower quadrants of it. So then I sold my runner position. If we closed above CE, I would have held my runner up here. Just to give you guys some insight on price action moving forward. And then I run through my specific levels every single Sunday with the students, kind of showing them how to build weekly narrative, supported the smart money reversal, reaccumulation right here, reaccumulation again, fair to close through CE. Again, wicks can do whatever they want, but if we fail to close through CE, I'm not too worried about it. And then we also had like a opening range gap right here, and then we also had a discount gap right here that we wanted to retrace price to. So ideally what I want to see happen is something like this. So as you guys can see, we're just chopping up, and then hold on, something like this. Just chop, 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 and then that's best case scenario. Just accumulate and then eventually just take out buy side. So that is my bias moving forward for next week.